Okay, folks, we are live and welcome to another week, another trading week. Thank you, God, for allowing us to make it through a awesome weekend. This was what the third and a half week sober October, no carbs. What is it? Intermittent fasting and reduced calorie intake. So I'm down about 7-8 pounds in the past 3 weeks. So feeling pretty good, very productive. I put out two videos. As a matter of fact, one is already published. The other one I have scheduled to be released tomorrow. It'll be automatically sent out at around 11:30, I think, or 9 o'clock. One of those two. I forget which one it is. But I'm going to post it here for you folks if you want to catch an early preview of the video, even though it is not launched. Take a look at it. So this video here has to do with the reindustrialization of the United States. Now, I did this video. This is actually part two of so far a two-part video series. And I did the first one back in July of 2023. And I picked some stocks and ETFs that I thought would do very well if my hypothesis was right. And I went back and I did some checking, and man, was I right. I mean, these stocks took off. I mean, the average stock in ETF is up around 40%, if not more. And I'm being conservative when I say that. So I have three more stock picks I put out there that have not yet run. So check that out. I put the link in there. I also did a video today about the union strike potentially ending. Right now, it hasn't been voted on. It's potentially ended. They have a potential deal, and they'll put it to a vote, I guess, sometime this week. And perhaps Boeing will be getting to get onto the right track for at least the next few years. So they also have a new announcement out of Boeing this afternoon that I'll talk about. They're going to be selling off some assets, probably some of their space division. So we'll talk about that article. But first, of course, let's say hello to folks as they drift in. I'm letting the futures settle down here a little bit. What you're looking at is the Dow Jones futures. This is the mini contract of the YM, and we are up at current 0.10%. We're just off of all-time highs here yet again. Let's continue on and take a look at the equity futures. Then I'll pause and I'll say hello to folks as they populate in. Let's move on over into the NQ. This is the NASDAQ 100. Moving up 0.10%. So on par with the Dow Jones. The Russell 2000. That's the RTY. I don't know why I'm looking for the symbol. RTY. That is up 0.20%. So as we begin the new week, the trend that has been in place since July, and that trend being is that we have the small caps outperforming the larger cap names. That's continuing into this new trading week. Now, the question is, how are yields? Because we know last week, the 10-year yield was very, very strong. And at current, we're down about 0.25% on the 10-year yield. So that could buoy the small caps. We're going to go to a chart of the 10-year yield weekly time frame in a few moments because it is a threat. Getting back to equities, let's take a look at the E-minis. And they are up as well, 0.10%. So across the board, the large cap sector is up 0.10%, with the small cap names up 0.20%, twice as much as the large cap names. Like how I did that math like that? Okay, let's say hello to folks. We have Polish Taco. Welcome, my friend. Sean, thank you for the audio check. As always, my friend. Hope you had a great weekend. Paul, welcome. Welcome. Okay, quiet night so far tonight for Sunday. Usually we have a lot more people, but I'm sure they'll filter in as time goes by. What else we want to take a look at here? Let's take a look at the dollar. The dollar is down relative to Friday's close. And the Japanese yen, I want to take a look at the Japanese yen. That is down as there we go. The euro is up. Now, taking a look at these two on a weekly time frame, the euro rallied off of the lows of the week, but man, we have had a really rough go of it of late with the euro. And the amazing part is that while the dollar has rallied, the gold stocks and gold have not cared. If you would have told me 2 years ago that the dollar would be up measurably and gold would be hitting all-time record highs and the gold stocks would be making new 52-week highs without any geopolitical risk out there, I would have said you're absolutely nuts. But that is the case because they are in demand. So right now, the path of least resistance for gold and the gold stocks remains up. Members, I went over it on the week ahead commentary. I will not repeat it again. I won't bore you. So euro trying to break out here on the week. We'll see what happens by the end of the week. Till then, it's all just conversation. Japanese yen weekly chart. Looks like a test of the 21 period EMA on a weekly time frame, and it held. It's hard to believe that we're already back to oversold levels on the yen. But the thing to remember here about the yen is this, is that when to properly use stochastics, you need to take a crayon out, unless you're using TrendSpider, and it'll usually do it for you. But let's clear this all off. And let's put this oversold reading into context. Now, if this entered an oversold reading and we had taken out the prior lows, I would say the yen is going a lot lower. But right now we're oversold, and there's a strong probability that we are not going to take out these lows or prior lows from back here in July, at least during this cycle. It looks as though we're going to hook up, put in another higher low, and the question is, do we break out to new higher highs? If that happens along with the euro, you got to expect for gold stocks and silver just to go ripping through the ceiling. Unless, of course, we hit a deflationary spiral. For whatever reason, the alerts are not working tonight. I tried it before we went live. Okay. I don't read that language. I'm sure it's a nice language. Thumbs up to you, my friend. Welcome aboard. Talon, welcome, brother. Okay, let's move on. So we did currencies. Let's take a look at commodities. Let's take a look first at natural gas, which already has put in a new weekly lower low. Let's see what it's doing on a 15-minute time frame. Now, I don't think this alert's going to hold here, but I'm liking this 15-minute reversal bar. Oh, it held. Okay. If we take out the highs of the after hours trade on Friday. I may just throw an order down there to nibble a little bit on natural gas. Arik from Israel, welcome, my friend. Welcome. We don't get many, we don't get many people from other countries. But as a matter of fact, I do need to give a shout out to one of our new members to the forum. We'll come back to the futures in a second, but I do have my priorities because apparently I am now a cricket fan. And my favorite team is, by default, India, which beat England. So I have people from India that are members of the Bull and Bear Banter trading forum, free, link below. So therefore, I'm automatically a cricket fan. My favorite team being India. Go India. And if you're not currently a member, please take a moment, sign up, and join in. Okay, back to the futures action. I'm going to keep an eye on natural gas. It's gotten really beat up of late. Let's see if we can get a short covering rally going here. Let's take a look at light sweet crude. That's not light sweet crude. Let's try that again, Bob. I'll get it eventually. Why I don't remember the symbol? I can't for the life of you tell me. I can't tell you. Where is it? Light sweet crude. There we go. CL. I knew that. CL is now up nearly a third of a percentage point. Oil's been getting killed of late. Closed at the lows of the week last week and not looking good. So we'll see what happens. The only time I would want to get involved with crude is if it started putting in higher highs. And I want to make sure that we're not putting in lower highs. So much like natural gas, if we start to, after a brutal sell-off, we start to take out prior highs, you're probably going to see a bit of a short covering rally. Does it hold? I have no idea. Bitcoin taking a breather. Wow, we have a bit of a potential outside reversal bar forming here. 15-minute time frame on Bitcoin. They moved it up higher to 69,465 the coin. Now we are negative. Let's see whether or not we take out this low. Moving on. Gold. That's not gold. Gold. Gold is up over a quarter of a percentage point. We are long of gold. We're long of the gold miners, long of palladium. Speaking of palladium, PA, that's up 0.75%. Let's check in with SI, silver. Silver up. Wow. Wow. Silver is up almost 2.75% on the session already. These commodity markets, meaning the precious metal markets, to be more specific, they're telling us something. They're telling us something, and I think what they're pricing in is I think the Federal Reserve made a very, very big mistake with that 50 basis point rate cut. I argued that they should not cut at all. At most, a quarter basis point. They bent to the market when 50 basis points, and I have more to show you about. That's really ironic about that rate cut in a few minutes. Stick around. I have a video to play you. At first, I thought it was spam. I'm like, you know what? This is. After I realized it wasn't, I was like, this is pretty cool. So please post away, guys. It's not just about money. It's about relationships, networking. George, good evening to you, my friend. Good evening. Okay, so silver, wow, really the poster child for bullishness tonight. Very, very nice. Very, very nice. Good way to start the week off. What else you want to take a look at? Let's take a look at ag. We'll start with soybeans. We did a lot of trading with soybeans last week. Actually, the past couple of weeks, it did very, very well. We are at current. Wow, we did a round trip here. I sold right up here at the buying down here, around here. I don't know exactly where I did it, but it was right around here. And I sold right before this breakout, and now it's done a 360, 180, I should say, not 360. We're going to keep an eye on soybeans. Very volatile, but I happen to like to trade them. I only care if they put in a higher high. Lower low, I'm going to avoid. I agree with you. The U.S. economy is strong. There was no need to lower the interest rates by 0.5%. Agreed. Yeah, they bent to the market, unless they know something that we don't know, and that's entirely possible. Let's move on. Let's talk about corn. Corn prices. Let's go to the weekly chart because there's no sense in watching 15-minute charts. Corn prices broke down last week, a rejection at that 21-period EMA. Wheat prices, they were rejected last week, closing down below the 21-period EMA. Momentum is measured by Stokes rolling over. Okay, so those names are not looking good. Let's bring up ZS weekly chart. Yeah, not looking good here. And this is a seasonally favorable period of time for the ag names. Now, we did, I think, mostly everything with the exception of oats. They're down, and volatility is dropping here at the open, down about 1/3%. NQ coming a little bit off of its highs. Natural gas still no reversal bar. We'll watch it. Okay. I think we caught up with comments. We can get right to it. Again, folks, if you're not part of the Bull and Bear Banter forum, link below. It's free for now. We're going to be shutting it down soon. And folks, I only have a number of free spots open. So I have a lot of people that have joined up, yet they're not participating. So to make room for those, because I pay a lot of money for this, to make room for those people that want to join and engage, I'm going to have to take some people that just aren't engaged and just say, all right, you're not engaged, so I can't take up the spot, and just I'm not going to ask anybody to leave. I'm just going to close you out, and that makes room for new people to join in with those free spots. There's a finite amount, so please, if you're joining up, great, participate. You have the feed here. If you have major news you want to share, or like cricket news out of India, or if you want some hot and fast conversation, head on over to the Bull and Bear Banter forum and chat with some really, really outstanding people. All right, let's move on. So I was playing catch up with George Gammon's YouTube videos, and I saw that he had made this one 9 days ago. And I'm going to play the first couple of minutes for you because it's very interesting. Let me make sure my audio is up.
There are some shocking similarities between October 2024 and October 2007. Does this mean we're headed for the next GFC, or are the people in the mainstream media and these experts correct that the economy is strong and resilient?
This is a very strong economy by all measures, and it doesn't happen by accident.
I'm going to answer these questions for you in 3 simple, fast steps. Step number 1, let's go over what just happened with these Fed rate cuts and compare it to history. Most of you know that September 18th, the Fed cut rates all the way down to 4.75%. There's a range, but the bottom of the range, 4.75%. That was a 50 basis point cut. And for a lot of the market, this caught them off guard. This was very unexpected. And now what we're hearing as far as the narrative with these experts and the mainstream media is that this may spur or accelerate economic growth, and it could take us right back to inflation. This is probably why you're seeing interest rates go up since the Fed dropped by that 50 basis points. But before we move any further, I actually want to point out that this wasn't 2024. This was actually 2007. That's right. September 18th, 2007, the Fed cut by 50 basis points. The exact same thing they did September 18th, 2024. And just like 2007, in 2024, they took interest rates down to 4.75. And just like 2007, for a lot of the market, it was completely unexpected. And now everyone is predicting that economic growth is going to accelerate to the point where we might even have consumer price inflation accelerate into the future. So this 50 basis point cut might have been a mistake. So what we have to do is we have to go back to 2007, which is what I did right here, and into 2008, and see exactly what happened, but not just with interest rates, with narrative. Editor, go ahead and throw up this quote
Very
from the Wall
important
Street
narrative.
Journal going back to September 19th, 2007, the day after the Fed cut by 50 basis points. The Federal Reserve lowered its short-term interest rates by half a percentage point to 4.75% to combat the effects of weaker housing market and tighter credit in the broader economy. The steep reductions in the Fed funds rate surprised many on Wall Street who expected a more modest rate cut, in other words, 25 basis points. Stocks rose sharply after the Fed's announcement, more on that in just a moment, with the Dow Jones Industrial Average gaining 335 points. The rate cut should reduce payments on many home equity lines of credit, credit cards, and some car loans. In other words, we're headed for a soft landing. The Fed has come in to save the day. Perversely, however, some economists say it could lead to higher rates down the road if bond markets expect the Fed's move to spur higher economic growth or inflation. Again, quite literally the exact same thing that we're hearing in.
So he is so on point with his analysis. I had to play it. I wouldn't want to attempt to duplicate it because he did it perfectly. Perfectly. So he goes on to try to poke holes in the fact that we have a strong economy. And to his credit, he wasn't hyperbolic. You know, he could have picked and chose charts to use to try to scare people and to try to get more clicks by being, again, more hyperbolic. He doesn't do that. I don't try to do that. I just try to lay out the facts. And he went on to talk about credit spreads. Credit spreads were the same back in 2007 as they were on that September 18th as they were right now. And they went all the way up to 22%. Right now, they're still at around 2.5%. No fear right now. And this was recorded about 9 days ago. So we're not seeing a lot of the same indicators flashing now as we did back then. But one of the indicators that I would be looking for after the election, because that's when it's going to happen, is a revision to the jobs numbers. We all know that when you net out government workers, that last jobs number that was released to try to put a little bit of hype behind the Harris campaign, it was a false number. When you X out government workers, we saw a decline in non-farm payrolls. So at some point in time, they're going to have to revise all of these reports to reflect the accurate numbers for the record. Everything that we get right now is an estimate or a guesstimate. Eventually, they come about the right number, they revise it, and all of a sudden, what looked like an economy that was healthy wasn't. And that's the exact same thing that happened back in 2007. They revised the numbers after the first of the year into 2008, and things were not looking good. Where they thought they had a vibrant economy to be worried about inflation, they didn't. In reality, we were heading into recession. Now, we have a couple of things that are similar to back then. Obviously, one of them is the credit spread. The other is the yield curve on inverting. All right, so here is 2007. Where's October? October 2007, and the yield curve was uninverting. Where are we right now? The yield curve has already uninverted and is moving up higher. Overlaid here in gray is the S&P 500, which ultimately rolled over off of what? Off of what? Where we're at right now, all-time record highs. So while I'm not saying that this market is going to roll over tomorrow, this week, and next week, the point I want to make is that usually when you get the uninversion of the yield curve, when the market buckles, it's usually coming off of all-time highs. So you're going to have a lot of people that are out there that are going to be perma bulls, and they're going to say, "Let not your heart be troubled. We're making all-time record highs." Yeah, you could have said that back in 2007. So be careful. Right now, I believe that the path of least resistance for equities remains to the upside. Why? Because I'm just not seeing the data right now to say that we need to go running for the hills, with the exception of the yield curve. But right now, the equity prices are strong. The only thing that's lacking, and it is a concern, is volume. I went over that on the week ahead commentary with members. Members, go check that out if you haven't already. Now, gold prices as well back in 2007, what were they doing? They were making all-time record highs. What are we doing now? Gold, all-time record highs. So we're seeing some consistencies. What we're missing is accurate economic data. So I go back to the question. As a matter of fact, it was asked earlier in the forum, and it's a great question. And it's so easy to forget about August the 5th. This is from Dale. What triggered that Monday bloodbath on August the 5th? It's forgotten about. Are we due for another? Didn't it follow a Fed rate cut? So we have a bunch of replies here. I know I replied to this. Yeah, the blame was on recessionary fears and the weak jobs number that came out in July. So, there was a reason for that sell-off. Something broke, as I like to say. And it could be the fact that what we have are the banks. Back in 2007, you had banks going under due to the fact that they had unrealized losses and they had resets on their consumer loans. That was here. Look at where we're at now. We have dwarfed in terms of unrealized losses at the major banks and even the regional banks that they have to paper it over. The banking sector in many cases is using this chart. If they had to cover these loans, they couldn't. They're insolvent. And I don't make this up. This is put out by the government. Now, he had pointed out in his commentary that people were predicting a soft landing back then. And I remember it. I was trading at the time. And everybody that knew, anybody that could read the financial statements of Countrywide Mortgage, any one of these banks, is that they had resets coming in terms of their teaser rates in late 2007, 2008. And you're going to see defaults skyrocket. And back then, the Federal Reserve started cutting rates 0.75 of a basis point. They had 2 emergency rate cuts in 2007, 2008. And everybody was betting on a soft landing. Look at where we're at now. We have a lot of chatter out there about it. Multi-month highs. We're off the highs, but still relatively high versus the norm of mentions out of Bloomberg about a soft landing. So this is a contrarian indicator. But for now anyway, folks, I look at the charts over the weekend. The path of least resistance remains high for equities until it doesn't. Now, I purposely titled this commentary NVIDIA and it making potentially new all-time highs because I was asked to, and I am certainly willing to abide. So let's take a look at NVIDIA for a moment. In terms of their fundamentals, and right now on Investors Business Daily, I outsource my fundamental analysis because they have people a lot smarter than me that are doing that for me, and I can check it out at the click of a button. So you don't get much better than a 90. In fact, you can't get much better than 99 on their composite rating. EPS growth, top tier. Relative strength, top tier. Although it is underperforming in the past couple of months, the S&P 500. Group strength, A+. Accumulation distribution, believe it or not, it's under distribution right now. We have earnings coming out on the 14th of November. EPS growth, 152%. 3-year EPS growth, 74%. So it's accelerating its sales growth. EPS estimate change current year, 120% ROE. This is the highest return on equity I have ever seen in my career. 99.3. Folks, for context, if you have an ROI in the mid to high teens, low 20s, you're doing good. You're running your operation rock solid. You are lean, mean. You're using the company's extra capital usefully. You're paying dividends. You're buying back stock. You're doing the right thing with the company's capital. This company is sporting a 99.3% ROE. Now, you may be looking at the PE ratio and saying, Bob, it's growing at 62. It's yielding, not yielding. It's sporting a 62 PE. You got to pay for premium. You got to pay a premium for this stuff. So I really don't worry about it all that much. Would I buy it into earnings? No. But without that binary event in front of me, sure, I would own the shares. And I may be owning them this week. We'll see how the analysis of the chart goes. But before we go into the analysis of the chart of NVIDIA, folks, before using TrendSpider, I spent a lot of time drawing trend lines manually, which I do still to this day. The however is, it's a lot easier because the time spent on scanning for charts has been reduced dramatically down to literally minutes. The most time I spend now is sorting through the list of returns that I get from the scans that I do on TrendSpider. So that's time I could put back into my business, more time into working with members, and it's unlocked a lot of valuable time. Time is money. Also, in addition to the ability to scan, you can back test. If you have a strategy that you're looking to back test, they have back testing tools. Their team will help you out with setting up that back test. Fundamental and technical analysis. So the technical analysis we've always known about. The fundamental analysis is something that they've now more recently moved into, and that is click of a button. We're going to show you in a moment on the video EPS dates and what those EPS dates resulted in terms of beats or misses, revenue growth at the click of a button. So you also get seasonality. You get analyst opinions if you value that. If you value the unusual options activity, it's all here. So please take advantage of the 35% discount code. I get you. Use the discount code CON35. Discount code CON35. Link below on YouTube. Linked above on Twitter. And if you use those links, you could quite possibly, get a better deal than the 35%. So head on over there, check it out. At a bare minimum, you're getting a discount of 35%. And I believe in it so much, I give it away free to our silver and gold level members. So head on over, check it out. And if you're in the forum, head on over here, click this link, and it'll take you on a guided tour of TrendSpider. Again, 35% discount code CON35. Link below on YouTube, linked above on Twitter. Let's talk about NVIDIA. Now, NVIDIA, this is a weekly chart. I want to go to a monthly chart. In fact, let's go to a quarterly chart. Look at this is the fundamental button. And what this fundamental button represents is rising revenues. Revenues have gone parabolic. And this chart here is just absolutely beautiful. It went parabolic in terms of share price back in Q3. This is now a monthly chart. And look at what we're doing at current. I can't believe I'm saying Q4. In Q4, we have a major breakout. Granted, we're in the first month of the quarter, and we have a few days left to go in the month. But right now, this is looking pretty outstanding in terms of price action for NVIDIA for the month of October. Now, when we take a look at the automated trend lines, and this is really good for those folks that are not familiar with how to draw your trend lines appropriately. If you're learning, that's fine, but this serves as a good test for your skills as here we go. It's right in front of me. I'm losing it today. As a technician. And so I just added on here the trend lines for a monthly view. We have no resistance above, clear blue skies above, with the exception of resistance back in June on a yearly time frame. No extrapolated upper bands of resistance. Now, the only thing you do have is when you go to a weekly chart. Now what we have on our weekly resistance and support levels, you do have a bit of resistance right up here at 148.60. That's about a little over $10 away from where we're at right now. So clearly value here in terms of the functionality of TrendSpider. Now, the other thing that's happening here with TrendSpider, not with TrendSpider, with seasonality for the company is that we're heading into a very favorable very favorable period of time. The month of October is about 50-50, okay? But the month of November, it goes gangbusters. It's the second best month out of the year, with the exception of, believe it or not, August. And December is not too shabby as well. So a very seasonably favorable period of time to be an owner of NVIDIA shares. Now, pulling back here a little bit and taking a look at the daily view and how we might open up on Monday, we didn't put in a new daily higher high on Monday. It's overlay the support and resistance levels. We broke out on the 8th rallied. I think we need another pullback and a retest here. Ultimately, I think we're breaking out to new all-time highs. But if I were doing this as a day trader or a swing trader, I would wait for a retest of support. If you're longer term here, fine, buy it on Monday morning. Let's take a quick peek at the 30-minute view. 30-minute view, lower highs. It's holding the lower band of support. We could quite possibly get a breakout here. So what I'm going to do is I'm going to set up an alert. I want to know if we break out and above 138.64. More importantly, we close there. I'm going to create an alert there. Okay. And we'll keep this active for 14 days. Probably not going to be necessary. We don't want any sensitivity, and we are good to go with NVIDIA. Now, spending a few extra minutes here, I did a video earlier today. I'll post the link in the stream, and it had to deal with Boeing. And then I'm editing it, and I realized I forgot to mention a couple of things about the chart on NVIDIA. And I want to go over them now to basically amend the video that I did on Boeing. I just threw the link in the stream. So Boeing, two things about Boeing. Let's take the automated trend lines off here. Let's go to a weekly view, and let's bring up our Bollinger Bands. Okay. What I want to point out here on the weekly chart of Boeing is that we had a very, very tight Bollinger Band squeeze. Now, they really beat it up. So this fired off to the downside, as sometimes Bollinger Band squeezes will, especially when you have a stock that's in a downtrend. This is no great shock. But I'm thinking that if they drive this stock lower for whatever reason, and that story today about the asset sales, I did not know about that when I made the video. That was posted later in the afternoon. I did not know about that when I did the commentary. It's probably not going to cause the stock to drop, nor do I believe that the I think it was an emergency landing on a plane from Senegal or going to Senegal. I don't think that's going to impact the share price. I think that the fact that we probably have a deal with the union workers, that will allow for the stock to rally. And if it doesn't, this is my long-winded way of saying, if it doesn't, I'm going to be an aggressive buyer of Boeing on any pullback, because my guess is if they do not rally Boeing on that news, I think that what they're doing is that they're trying to wipe out all stops down below here. Because when you take a look at this chart and you think about what's happened over the past several weeks, we've had a lot of bad news. A lot of bad news. They've offered up a shelf offering, which is dilutive to the shares. So you have that. You had a rejection of the union strike. You had a layoff announcement of 10% of their workforce. That's on top of the 10% of the layoffs that they announced back in 2020. So a lot of bad news out there. But the stock has not really gone down. And in fact, it reversed to close up on the week last week. So what that leads me to believe is that the stock should go up. But the institutional investors are not going to be satisfied until they wipe out all the shorts first. So if we get a rally on Monday, Tuesday, I'm not buying. I already have a position. But if they knock it down, and let's throw up some automated trend lines here. If they knock it down to this range right here at around 139, 140 per share, I'm going to be buying the stock hand over fist, because I think that that's what their goal is. They'll drive it down to support. You'll have buyers down there. Then what are they going to do? They're going to send this thing up higher. But they need to spook the remaining longs and to scare them out. Anybody thinking about buying this stock, they have to spook them. So they're gonna take out all the stops. What does that do? Automatic sale of Boeing shares. What are the institutions going to do? They're going to step in. They're going to buy it on the cheap. That's what they do. So that's my first addendum to the commentary I had on Boeing earlier today. The other, which I meant to go over, was seasonality. Now, seasonality for the month of October, going back 50 years, is no bueno. Horrible. Down below 50%. But November and December, great months to own Boeing. Now, to be curious, as it always pays to be, let's go shorter time frame, because 50 years is a lot of time. Let's take a look at the past, I don't know, 11 years. Pretty much the same on October's price action, with November coming in strong and December coming in strong. So again, folks, if they knock down the shares of Boeing, I think that it's going to be a screaming opportunity to get long. And in 3 to 4 years with new management, I think that the shares are going to be a lot higher than where they are right now. So, folks, we're going to be taking requests from in the stream here. So if you're not currently in or joined to the forum, sign up. I don't want a credit card. You're not going to be asked for one, but put it on the feed so that way I don't miss out on anybody. There's way too many comments to go through to capture everybody. Okay. Let's talk a little bit about, what time do we have? 6:48. Let's talk a little bit about the fact that going into this new week, this past week, we had the 47th new high of the year on the S&P 500. Huge. Economic data coming out this week. Fed heads coming out tomorrow. We get leading indicators coming out tomorrow. Not much on Monday and Tuesday. Wednesday, they're going to take the market up. They're taking the market up. Thursday, initial jobless claims, services PMI. I mean, these are important numbers, but they're not really market movers. Durable goods is a market mover. That's on Friday. So I think that the market has free room to run here to the upside this week. Not a lot of economic data to derail it. The only thing that could impact this market is, or are, earnings. We have a lot of earnings coming out this week, folks. So far this quarter, earnings have been pretty good, especially out of the financials. SAP, that's a European company, coming out tomorrow. Tuesday really is when it begins. Verizon, General Motors share stock chart is looking very good. Big Bollinger Band squeeze setting up there. 3M, RTX, Freeport McMoran, that'll be interesting. GE Aerospace, Lockheed Martin, a lot of industrial names coming out this week. Texas Instruments, Boeing. We just mentioned Boeing. They're coming out. That's the 23rd. Coca-Cola. And this could be the catalyst to send the shares down lower. They're already losing money. And their 10-year revenue growth rate is now moving back up. So if they disappoint on earnings and they beat the stock up, I'm a buyer. And rarely do I say that. CME Group comes up. We'll be talking about their chart in a moment. General Dynamics, a lot of industrial names here this week. Tesla after the close on Wednesday. IBM as well. Big week for earnings. Thursday, pre-market, American Airlines, UPS, Southwest, NASDAQ. What else is important? Deckers is a good company. What else do we have? Colgate Palmolive, that's a staple. And that's pretty much it. So big week in terms of earnings. Now, what we need to pay attention to as well here is that it's great if companies beat, but they need to beat by a mile and they need to guide higher. Why? The Schiller PE multiple is at 37.35. Not cheap. This is a very, very expensive market. This market needs to grow into this multiple in terms of performance with earnings and forward-looking guidance. Right now, the banks that reported haven't moved the needle on the Schiller PE ratio going lower. If anything, it's moved up higher. S&P earnings are on pace to hit another record high in Q3, up 8% over last year. Bullish. Federal Reserve expectations for the November 7th meeting, 100% probability of a cut, almost 100% odds of a quarter basis point, where they're beginning to inch in the possibility of a half basis point. At one point in time, right after the last Federal Reserve rate cut, it was a foregone conclusion we were going to get a 50 basis point cut. That's in the rearview mirror. Probably not going to happen. Quarter basis point is baked into the cake at current. Last chart before we go to requests. Total debt versus nominal GDP. This is just parabolic and unsustainable. If whoever the president is in 2025, if they are not able to honestly grow GDP without government spending, we have a lot of problems. The reason why we have GDP growth right now is because you have the Treasury that's been spending money hand over fist. So take that punch bowl away, and this economy's got all sorts of problems. So whoever comes in, they better know what the hell they're doing to get GDP growth growing organically. We need tax cuts, and a lot of them. So fingers crossed for, I'm going to say it, President Trump. Let's go, Trump, please. God forbid. The other one. All right. Let's do some chart requests. Let's go to the forum. I got to write these down. Ron Lowe. I got to refresh this because half the time I forget people. Very complex job I have. Very complex job. We don't have Franklin on tonight. Very strange. I knew there was something missing. Somebody missing. Bonnie Bean, NEX. John, Tesla. Dale. Yeah, you just limit them to 2 in the future, okay? I'll go over these, but limit them to 2 in the future. ADSY. HWM. RKLB. I'm going to send you a bill. FTAI. All right, let's do this. Okay, let's get out of seasonality mode. And let's talk charts. Let's go weekly view on these. First one up, NEX for Bonnie Bean. It's going up. Let's go to a monthly chart here. Let's get rid of the automated trend lines first. It's going up. Oh, this is going way up. Way up. NEX, you have a Bollinger Band squeeze. The Bollinger Band's in red inside the Keltner channels. They are now widening out. You have moving averages, which are stacked, meaning the share price is trading above the 20-period moving average. And I'm sure you have shorter duration moving averages up above there as well. This is a buy. You have $8.19, which is a bit of resistance. We're off that level right now. I think this is breaking out. You have Higher lows. Beautiful. Weekly chart. Beautiful. Daily chart. Let's throw over some trend lines. Yeah, you have a lot of noise on this chart. A lot of support and resistance levels. So this is probably not going to be a straight shot higher, unless, of course, it has a lot of shorts in the name who are ready to get squeezed out of the position. So I wouldn't get aggressive right here, right now. Would I be a buyer? Sure, I would nibble. I would scratch the itch. But I would wait for us to get through all of this overhead supply above. In fact, let's do this. Let's take the daily lines off. Let's overlay weekly trends. I'm surprised it's not giving us any. Let's throw up a heat map. Let's go to a weekly view on the heat map. Smooth out the noise. Yeah, you got to get above. Before you get aggressive, you got to get above 815, 825 per share. But a lot of the hard work has been done. Here's your retest of support. You had multiple support levels, a lot of activity in those ranges. Good stuff. I think that this is going a lot higher. Tesla. Tesla reports this week, so fair warning. You have a double top here on Tesla. We're at a support level on a weekly chart, or just off of it, I should say, at around 209.34 is weekly support. You don't want to see a close below that mark. I wouldn't buy it in front of earnings. I just don't do that. I don't care if the chart looks insanely bullish. I don't. And with a chart that has a lower high and it's looking lethargic, I certainly won't do that. So I would be careful here with Tesla. I would make my decision about as to whether or not I wanted to buy Tesla stock after earnings. Let's see what it does. No need to take on that kind of a risk. Daily view. I'm not liking the daily chart. Great week last week in terms of price action for the overall market. Tesla, there's a lot of red on the screen. And to me, this looks like it wants to break south. It may go up, may fill the gap here, but I'm not a buyer here of Tesla. I just don't like it. I wouldn't even sell puts, not in front of earnings. ERJ. Embraer. Is this the airline company down in South America? Or is that Bombardier? Something like that. I don't even know if they're still in business. Good looking chart. Monthly view. Higher lows. We've broken out above major resistance. Even quarterly resistance above here in dashed line. We've broken through. Let's overlay the monthly support and resistance levels. This has got a clear shot way up here to 49.76. Volume by price. I think this is going up. I think it's very, very bullish. Weekly chart. It's had an orderly pullback. It's got to hold 31. Let's call it $32 a share. If it closes down below 31.50, I would avoid. Daily chart. So you have a little bit of support here at this volume shelf. Now we closed down below it. So monthly strength, bullish, weekly chart, daily chart saying, you know what, let's watch and see how this plays out. I would want to see it recapture at a bare minimum $33.86. Even let's say it's 34 bucks. 34 bucks. I want to see recapture that support level. EADSY. NVIDIA in the chart with closing prices, it closed Friday above, closing on 6/2024. Okay. EZ. Let's take these lines off. Well, you know what? Let's keep them on. Actually, it's part of the conversation. Let's clean this up. Volume by price. Let's take that off. Let's go weekly view. We broke out last week out of this downtrend channel. Upper band purple, lower band green. Watch for a retest of support down at around 36.50, give or take a dime. But I'm going to want to see a pullback. If it rallies, I'm not going to chase it, or I wouldn't chase it. Oh, this is Airbus. I still wouldn't chase it. I know they just announced a round of layoffs over there. Wait for the pullback. Daily chart. It held support on a daily time frame. It broke out. If they pull this stock back at all early this week, I'd be a buyer. I like the daily chart. I'm a little bit torn here. I like the daily chart. If they manage to close it above $38.25, I'd be a buyer. That means we are above these resistance levels. I'd be satisfied with that. I would take on a long position. HWM. Another aerospace play. It's already had a great run. I would not initiate a new trade here. Were I long, I would set a trailing stop loss order. I think it goes up higher. I would not sell the stock. Path of least resistance is clearly to the upside. Daily view. I think it's going up. It could pull back another day, bounce off of this very, very highly respected lower band of support. But I think it's coming up all the way up to around 118 per share. And the test is always at the top. Do we break out or do we break down? I got this little moth. I don't want to kill him, but he keeps jumping on me. So, Helmet or aerospace, bullish. I would remain long while in a position. If it pulls back to that support level, I would entertain a long trade here. RKLB, Rocket Lab. Wow, this guy's totally into aerospace. Let's go weekly view. Beautiful breakout last week. You're going to have resistance up here at 12.22 per share. Any retracement back down to this lower band of support at around 9.84 in that ballpark. It doesn't have to be exact, give or take a dime. I'd be a buyer of the shares because I think it's going to move up here to 12.25 per share. Let's overlay some weekly support and resistance levels. Make sure we're not missing anything. Nothing above to be worried about. Daily view. Yeah, I think they're going to, this is going to be the short-term rising upper band of resistance at current at around $11.62. That changes daily. So ultimately, I think you're going to hit tough resistance at $12.30 per share. If you're swing trading this, that's my price target. I would look to exit stage right once we hit that level. If we break out above that $12.30 mark and we close there, you may want to reestablish a long bet. I would not short the stock at that level. Last chart up for the evening, folks. FTAI. FTI Aviation. Weekly chart. Bit of resistance formed above. But I think it's consolidating. It's probably going to break out. Price target 156 per share. and that'll change day to day to the upside because it is an ascending, rising upper band of resistance. Would I buy it here now? No. I would buy it down here at around 140, or if we get a breakout on a retest of the breakout point at around 145. Folks, thanks for being here. Everybody have a profitable trading week. It's awesome that you're here with me. We have about 40 people. Much appreciated. You could be doing a lot of other things. You're here with me, and I really, really appreciate it 1,000%. Don't forget, take advantage of the 14-day free trial offer over at TrendSpider. Discount code CON35. Link below on YouTube, linked above on Twitter. And I give this away free to our silver and gold level members. I posted the week ahead commentary, which is our strategy session in the members area. Go check it out. And I will talk to you folks in the morning. Everybody have an amazing rest of your Sunday evening.